Alright, so in this video, we'll be talking about the different kinds of indicators, which is two of them that I'll be showing you. One is called RSI and one is called MACD. Alright, so how do you see that? How do you add indicators? Now, if you see this icon at the top, just beside that camera icon, alright, this is actually the indicator icon. So all you gotta do is click on it. Okay, now because we are using the TradingView platform, there are a lot of indicators. So if you were to just do some research, you'll be able to find a lot. But one of the more common ones that I'm about to show you is, for example, the RSI, which is called the Relative Strength Index. So if I were to click on it, you'll be able to see it being displayed right here in the chart. Okay, so this is one of the indicators that you can use, which is called RSI. Now, I will just briefly explain like here. Now basically when RSI is above the 70 mark, it is actually showing you an overbought zone or overbought region. Okay, so anything that once the chart goes above the overbought region, the tendency for it to come down is higher. Alright, take note of the words choice here, is tendency. Of course it can sustain, right, continuously as well. Now on the other end, which is vice versa, what you can see here is that when it's below the 30 mark, okay, you actually see that the charts went down even more, right? So remember when I say there's a tendency for the chart to actually head down, and that's what I imply. So even though it's in an oversold region, it continuously went down, okay, to be even deeper in the oversold region. So now you can see that it's actually recovering into the normal range, okay? So there's one more tip that I can give you, is that anything that crosses above 50 or below 50 actually kind of indicates a kind of a bullish or bearish trend. So meaning to say, if the line goes above 50 mark, the tendency of it being bullish is higher than as compared to being bearish. Okay, that's just one tip to note. Now of course, RSI is usually used in combination with other indicators and with price action strategy, with different kind of strategies. So I would highly suggest you to read up more, okay, instead of just relying on RSI to trade. Okay. Next, I just want to show you is what we call MACD. Usually, a lot of people pair MACD and RSI together. Now, the one thing that I want to share with you quickly just about technical indicators is this. Now, technical indicators work in a sense because a lot of users are using it. What do I mean? Okay, to me, I feel that technical indicators work because there is a certain bias to it. Because everyone is using the RSI, for example, everyone is using the RSI, they can see that it's going above the oversold region, and therefore people get bullish. Okay, for example. So the same logic as MACD, right? When you see a cross happening, okay, and you can see that the bar graph or histogram is actually switching towards the positive side, right, going above the zero line, it means it's a positive trend. People start being more bullish. Okay, so it's a tendency and it's also a certain bias, right? So people based it, and when more and more traders base on the same theory or the same logic to trade, there is a repercussion, or there's a wave of people believing in the same thing, and it's like a wave that comes, right? Because people feel that, hey, when the RSI goes up, it means it's bullish, and when MACD is switching towards the positive side, it means we are having a reversal, okay? And therefore, like, everyone believes, and it becomes a self-fulfilling prophecy because it's happening, right? There's a certain bias that's going on. So this is something that you need to understand, need to note, is that technical indicators work because of that reason. So there's a reason why a lot of people use the same kind of technical indicators. You can hear so many in the market, right? Combination of this, you also hear Elliott wave, which is one of the more popular ones. You have here Ichimoku clouds, which is quite common as well. You will hear a combination, right? There's so many different kind of indicators, right? There are so many people talking about it. But I think one thing that you need to always remember is that you need to find something that works for you. This is the key. It's so important, and you need to backtest it. Alright, so we'll talk about that next time. So thank you. We'll see you in the next video.